This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Bashirtadis. Thanks for joining us at XM.com. A tempestuous week for global markets will come to a crescendo today with the latest round of U.S. employment data. Another solid report is anticipated, with nonfarm payrolls expected to clock in at 180,000 in April, less than the 236,000 in March, but still a healthy number overall. The unemployment rate is seen ticking up, albeit from historically low levels, while wage growth is projected to hold steady. By most indications, the U.S. labor market remains exceptionally tight, with the markets now pricing in almost even chances for the Fed to cut rates in July. The stakes are high. While this gloomy pricing is likely a reflection of the renewed turbulence in the banking system, it still implies that investors anticipate a deterioration in the economic data pulse that gives the Fed cover to slash rates sooner rather than later. As for the dollar, its reaction function in recent months has been asymmetric, unable to benefit much from strong U.S. releases, but losing ground on any negative data. It was a rocky session for the euro on Thursday. The single currency came under pressure after the ECB rolled out a 25 basis point rate increase, disappointing those betting on a bigger move. Traders saw that as a hint the ECB is near the end of its tightening cycle and proceeded to recalibrate the terminal rate lower. A relatively hawkish tone by President Lagarde and a surprise announcement that the reinvestments under the APP program will come to a halt by July didn't do much to turn the tide in the euro, although the currency managed to recover some ground early on Friday. Under the radar, it is the British pound that's performed the best so far this year, with the Swiss franc being a close second. It's difficult to pin this outperformance on domestic UK developments, as the BOE has been reluctant to raise rates despite double-digit inflation. Instead, sterling seems to have benefited mostly from the rally in equity markets and the dollar's softness. Gold came within touching distance of new record highs this week, boosted by safe haven demand, as fears around the regional U.S. banking system flared up again, hammering Treasury yields down. Finally, Apple reported earnings that exceeded analyst forecasts overnight, propelling its share price higher by 2% in after-hours trading. Lost in the excitement was the fact that revenue declined from last year, while earnings were flat, making it difficult to justify the stock's premium valuation at 28 times forward earnings. This was today's Daily Market Comment. Thanks for joining us at XM.com.